The term asset refers to a resource with economic worth that a person, business, or government owns or manages with the intention of gaining advantages down the road. The currency's value depreciates and loses purchasing power at a certain rate, which is known as inflation. And that is the reason, despite being a safe asset, cash is terrible to hold. Nowadays, people are searching for ways to protect their hard-earned money because of the recent COVID outbreak and the ongoing crisis in Ukraine, which has caused inflation rates to steadily rise. Here is the list of some of the best options to save your money from losing value over time. Land is the first asset on our list. It is categorically and objectively appreciating asset for two basic reasons. Firstly, land is a rare resource because there is only a certain amount of it available on Earth that is suitable for habitation and use. Since it cannot be created, it is a limited resource. Therefore, based on the concept of supply and demand, its value is likely to rise over time, specifically as the population grows and the demand for land increases. The benefits of diversification it offers to investment portfolios at the time are among the most persuasive arguments for investing in land. Due to the stable returns and minimal correlation with other asset classes, investors have started to diversify their portfolios more to protect themselves from market risks. Bill Gates is a good example. The Land Report said in January 2021 that Bill Gates now owns 242,000 acres stretched over 11 states, making him the largest private landowner in the country. This says a lot about land as an asset coming from one of the richest people in the world. With prices in the United States rising annually at their quickest rate in over 40 years, land as an asset also makes a great inflation hedge. Stocks are financial instruments that reflect a share of ownership in a business with the expectation that it will flourish and grow. Due to the fact that the majority of firm portfolios are substantially weighted in equities, which tend to be more elastic, stocks remain resilient during periods of inflation as well as significant crises or disasters. Investing in the stock market is a long-term endeavor. To guarantee that the failure of one business does not completely ruin your portfolio, it is smart to diversify your investment portfolio by making investments in several industries. Cryptocurrencies. Digital currencies known as cryptocurrencies are sweeping the globe as more and more individuals adopt this new way of life. The most popular cryptocurrency is Bitcoin, which is expected to be valued around $30,000 USD per coin. Bitcoin is gaining increasingly in demand as a result of its decentralized structure and limited availability. Altcoins, or currencies other than Bitcoin, such as Dogecoin, Ethereum, and Polkadot, to mention a few, are alternative cryptocurrencies worth investing in. As seen by U.S. President Joe Biden announcing an executive order to study the environmental effects of mining digital currencies and establish restrictions to limit their use by terrorists and criminals. Digital currencies are gradually becoming acknowledged by governments. A suggestion for the government to produce its own digital money was also endorsed by Biden. A digital dollar would not be as volatile as Bitcoin, but its operation would be comparable nonetheless. A ledger and digital wallets would very probably be used by a cryptocurrency with official backing. Art. Have you ever questioned why the wealthy purchase art? It's not only because they enjoy the product. According to the Wall Street Journal, prices for modern art have beaten the S&P by 174% from 1995 to 2020, making the art business one of the hottest commodities on Earth. Additionally, it has relatively little connection to any significant asset class, making it a powerful tool for portfolio diversification. One of the biggest reasons to invest in art is that it appreciates in value over time. While the value of cash can fluctuate, the value of art tends to go up over time. This makes art a much more stable investment than cash. Another reason to invest in art is that it's a unique investment. When you invest in art, you're not just investing in a physical object, you're investing in the artist's story, their creativity, and their passion. This makes art a much more personal investment than cash, which is simply a piece of paper with no emotional values. What I just shown you are several assets that are preferable to cash, but selecting one or more to fit your portfolio will rely on your research, personal preferences, and the advice of your financial advisor. Many successful people utilize the method of investing in assets that produce income or cash flow. Additionally, one of the greatest ways to create a financial cushion is to diversify your sources of income. Have a great day, and I'll see you in the next video. If you find value, like the video, and don't forget to subscribe to the channel so you can benefit from new videos as well.